All right. Thank you everyone for attending. Sorry for the late start. Um, we're doing the monthly market update webinar for July 2024. Quick disclosures, Silverstone Financial is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk, and unless otherwise stated are not guaranteed, please be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed within the presentation. And of course, past performance is not a guarantee of future results. You can learn more about our website and our disclosures on our website. And you can submit any questions you may have using the Q&A button at the bottom of the screen. So, quick bio about myself. I'm a certified financial planner, certified private wealth advisor, accredited investment fiduciary, accredited portfolio management advisor, chartered retirement planning counselor, and I have my master's degree in financial planning. You can learn more about me on my LinkedIn. And Silverstone Financial is a fee-only fiduciary registered investment advisory practice. We provide comprehensive wealth management services, including financial planning, investment management, tax preparation, and estate planning. You can learn more about us on our website. All right, let's hop into it. So June was a pretty good month. The Dow was up 1%, the S&P 500 3.5%, but the real stars, what carried the markets, what made it a good month, were the mega caps. Specifically, you can see Apple was up almost 11%, Nvidia, Broadcom, TSM, these are all semiconductor manufacturers or designers. They were all up high single or double digits. Tesla was up 12%. Those of you might not have heard of Eli Lilly, but it's a very, very large healthcare company. It was up to almost 12%. And Microsoft, Meta, Google, Amazon, all of these companies, they only were up 4 or 6% for the month. These are all really strong numbers. All the professionals, investors seem to be very smitten by all the AI hype, the potential for artificial intelligence in these companies to benefit from that amazing technology. However, it's not all rosy. Small caps were down 2.5%. It wasn't really seen the small and the mid cap underperformance because the large caps and the mega caps just carried everything this month. But you do see in especially utilities, basic materials, some smaller healthcare names, some energy names had a rough month. It wasn't that bad. 2.5% isn't significant. Shouldn't make or break anyone, but it definitely is a tale of two cities with mega caps versus small caps. The ex-US, so international companies that are not US based, continued to underperform as they have for the past 30 years, doing slightly better than small caps, but still underperforming, losing about 0.5%. Bonds gained about 1% total return for the month. This is mostly due to the continued hopes with rate cuts coming at the end of the year or beginning of next year from the Federal Reserve. If rates are cut, bond prices will go up, and especially with inflation cooling down, and we had some good economic numbers come out this month. Bonds having a 1% rally for the month is pretty good for bonds. Gold was flat. Crude oil ticked up a little bit, 6%. Again, crude oil is very volatile, so 6% change isn't super significant. And Bitcoin was down 11%, which is interesting to see because usually Bitcoin is very correlated, not very, but somewhat correlated to these tech names. They're seen as similar in terms of, high tech, disruptor kind of investments. But Bitcoin pulled back a little bit this month, but still a monster performer for the year. When we look at year to date, Bitcoin's still up 32%, a great performer for 6 months. But it doesn't hold a candle to the best performer on the list right here, which is Nvidia, being up 150% for the year, like year to date. So it's 6 months. So imagining a 300% return on a multi-trillion-dollar company in a year, annualized, that is both incredible and worrying. To me, it definitely is starting to get to a point where the market's getting frothy. It's getting a little bit over hyped on these names. You can't have companies go up and up and up and up forever without some people deciding it's time to sell and get their money out. So I wouldn't be surprised if the second half of this year, probably the next 2 or 3 months, will cool off a bit, and hopefully we'll recover for the end of the year. If you see the graph I show every month, this is historical monthly returns. It shows a little bit of the cyclicality and the seasonality of returns in the market. Why I mentioned the potential that we might pull back a little bit in the coming 3 months is historically the third quarter is the worst performing quarter in the stock market. And we've had a monster first half of the year being up 14.5%. Just the past 2 months being up 8%, 8.3%-ish. It is really incredible to see, and I wouldn't be surprised if we follow this pattern where the next 3 months might cool down a little bit and then pick up again near the end of the year. I'm saying that seeing that the trends usually hold up, or there's at least a little bit of a skew toward the seasonality. But I'll mention, the beginning part of the year didn't follow the trends. The best performer, best month historically in the beginning part of the year was the worst month for this year. And some of the worst or mediocre months that we have, May and June, had great months. So it's very possible that 2024 is not a year that will follow any of these historical trends, and maybe I'll be completely wrong. It is hard to tell what will happen in the markets. I'll quickly show the S&P 500 chart. Again, if you've come to multiple webinars in the past, usually I have a little bit more annotations on these charts, but there isn't that much I want to point out here. It is essentially a basic chart going from the bottom left to the top right. It's kind of what a dream investor is looking for, is just up and up and up. It's really hard to call the top, and this chart, again, doesn't have any annotations on it, isn't full of technical analysis, but I could see it continue to go up. We haven't necessarily hit a top. We haven't necessarily seen very, very strong technical evidence that this is all going to crash. It has just been consistent performance, being mostly dragged up by Nvidia. A lot of the market is just following what Nvidia does. So in some ways that's great since Nvidia is going up, but in other ways the S&P 500 no longer being 500, but being the S&P 1, being dragged by one company, definitely increases risk, increases return, at least in the past year. But there's definitely a little more risk, especially just seeing Nvidia be make or break. We'll see what happens. Hopefully next month I'll continue to give you good news, but I don't want to spend too much time on the daily chart. So let's get into the notable events for the month. It was definitely an interesting month. Not too many events that were material happened, but still, especially at the bottom of the slide, there was some back and forth stuff that was a little bit fun. But we'll start at the top. The Federal Reserve met June 11th and 12th, and had their release of their economic projections for the month of June. And it was nothing that was unexpected. It was just showing that, hey, we expect that in 2024, rates are going to stay around 5%. And then rates will probably be cut in 2025. And then in 2026, they'll be cut a little bit more. Nothing surprising. However, it is good to see that rates will fall or are expected to fall in the somewhat near future, especially for those that are home buyers that have a lot of their expenses tied to these interest rates. It will give a little bit of relief to the economy. However, we don't want to cut too early because it could allow inflation to return. So far, the Federal Reserve has been doing a very good job, at least in my opinion. I've definitely complained about them in the past, but they're doing quite a good job at threading the needle and finding the right time to cut or the right time to just hold it steady. So far this whole year, they haven't made any changes to the rate. It's been flat. And now all the analysts are bickering about when they're going to cut. Are they going to cut in November? Are they going to cut in December? Are they going to cut in 2025? Or is all that crazy and they're going to cut next week or next month? I'm definitely not in the last camp. I'm kind of hoping that they keep interest rates high because the economy seems to be handling it well. And then when is time to cut slowly. Inflation is more worrisome to me than the potential growth that interest rate cuts could add to the market and add to the economy. Moving on from the Federal Reserve, those of you that know the S&P 500, maybe not follow it, but S&P Global, S&P Dow Global, they run the various indices like the Dow Jones and the S&P 500, but they announced the changes that were going to happen. I think it was June 24th when they came and the changes went into effect. But 3 companies were replaced in the S&P 500. Cybersecurity company CrowdStrike was added. Global investment firm KKR was added, and web domain seller GoDaddy was added. And the 3 companies that left was financial services company Comerica, management consulting company Robert Half, and biotech company Illumina. Again, for those of you that just invest in an S&P 500 mutual fund or ETF, this is not going to affect you in any strong way. Usually these changes are made to the bottom of the fund, so it has a very small, very, very small impact on the investment as a whole. But for these 6 companies that were either added or removed, it definitely had big impacts on their stocks. Again, with NVIDIA and these mega caps taking over more and more of the S&P 500, I think it's like the top 10 companies are 34% of the S&P 500 or something like that. It is very impressive how large these companies are, and somewhat worrisome that a diversified equity fund of 500 stocks is really, much smaller than that, just a few stocks that hold the majority of it. So it definitely brings into question, how diversified are you when investing in a market cap weighted index fund? So talking about these big companies, I wanted to show the whipsaw that we saw, all these companies taking over the #1 spot on the world's, or yes, the US's at least, most valuable company. So Microsoft was the most valuable company. And then on June 12th, after Apple had announced their AI developments and upcoming releases at WWDC, which is their conference for developers, the stock shot up and overtook Microsoft. And then 6 days later, NVIDIA overtook both of them had a crazy week and became the most valuable company in the world. And then as of today, it looks like Microsoft has retaken its crown and is the most valuable company. Again, for day-to-day use, it doesn't affect anyone on this call who's the most valuable company. But it is interesting to see how much change can happen in 1 month. They're all neck and neck, flip-flopping back and forth. And again, these flip-flops aren't minor. A small 1% change is something like 300 or $30 billion because these companies are 3.5 trillion almost in their market caps. They're massive companies. When you compare them to countries' GDP, like it's amazing how large these companies have become. So it's interesting to see. I'll add any updates in the future if there are more whipsaws on the most valuable company in the world, but I probably won't bring it up again in the coming months. It's too much change happening too quickly for most people to care. On to a few more notable events. So if you had attended a prior webinar, you might have remembered Elon Musk having his record breaking pay package be nullified by a judge in, I think, Delaware. And of course, Elon Musk missing out on, it was like 56 billion, or it was very high. It was something 30 to 70, somewhere in there, billion. Honestly, at a certain point, it doesn't really matter what the number is. When he was denied all that money, he understandably was a little bit upset. So he put on the ballot and on the company's voting ballot two major changes. One was he wanted the incorporation to move from Delaware, which was the state that stripped him of his pay package, to Texas, and he wanted the shareholders to reapprove his pay package. And I honestly thought that Texas incorporation was probably going to go through and the pay package was going to be shot down. However, like the very, very large institutional holders of Tesla, including Vanguard and others, decided no, they want to continue to have Elon at the head and to motivate him. So they reinstated and overruled, essentially by shareholder vote, the judge and regave Musk all these billions and billions of dollars. I believe it still has to go through courts and such. Elon hasn't been paid yet, but still, it's been an interesting journey for the story, and it seems that it's now done. It seems now that the story, the back and forth will probably end, and Elon will be getting his very large record-breaking pay package. On to other very, very large numbers. Warren Buffett, he donated $53 billion of Berkshire Hathaway stock to the Bill and Melinda Gates Foundation and 4 other family charities. This was his largest annual donation ever since he began these annual donations in 2006. Of course, he's part of, I think it's called the Giving Pledge, which is a pledge among a number of billionaires to give away 99% of their fortune. And he still is following that desire and pledge and is trying to give away his money. Unfortunately, or fortunately for him, it's very difficult to give away all your money when your stock, Berkshire Hathaway, which is the company that most of his wealth is in, keeps going up. So there's more and more money to give away. He still owns 14.5% of Berkshire Hathaway's outstanding shares, which puts his fortune at around $128 billion, which this is after his gift, and this is meaning he's at the 10th richest person in the world according to Forbes. So he's going to have to really pick up giving away money if he's trying to do it within his lifetime. More likely than not, he probably has estate documents set up and trust set up so that it doesn't actually have to be done within his lifetime. But still, it's a mind-boggling amount of money to give away, and we'll see who the recipients will be. If it'll continue to be the Gates Foundation, which is what I expect it to be, and a few other charities. I wanted to throw in the top stocks driving the S&P 500 in 2024. I saw this from Visual Capitalist. And you can see that right here, this big green box right here, this is return for the S&P 500. So direct return, 5 percentage points almost was just from NVIDIA. Of the 14.5% return this year, a third of it is just NVIDIA. Just NVIDIA is incredible. Then when you add in the other mega cap names, you got another 1.25, another 1, another 84, another 81. You're starting to get into taking up half of the returns of the S&P 500. And when you look at the rest of the S&P 500 beyond the top, I think 10 names, 1, 2, 3, 4, 5, 6, 7, 8, 9, beyond the top 9 or 10 names, they only contributed 3.48%, which is about a fourth of the returns. It's really incredible to see, somewhat worrisome. Again, I'll bring up my opinion that the S&P 500 is not a particularly diversified investment fund anymore, just because A, the weightings are so heavily in a few companies, and B, how correlated they are to one another. I believe almost every name here, other than Eli Lilly and Berkshire Hathaway, every other name is a tech company. And so eight of the 10, or eight, yeah, it seems like seven of the 9 or 8 of the 10 of these companies are all tech companies that are being driven higher based off of AI hype. So for those that are interested in learning more about my personal investment philosophy that I have for clients of the firm, you can go on my website, and on the top you'll see our investment philosophy tab, and it explains how we invest, and has a video, I think it's like 5 or 6 or 7 minutes long, that explains growth at a reasonable price, which is my personal investment philosophy, and various other strategies that I like to employ with clients, like passive investing, being factor-based, direct indexing. All these can help both build wealth and retain wealth, but also it's a little bit more diversified than just buying a market cap weighted index. That, you know, all these companies within the index are correlated to one another. It's not necessarily diversified, in my opinion. The last notable event this month that I have written down here is that the Justice Department, U.S. Justice Department, decided to criminally charge Boeing with fraud after it violated a 2021 agreement that had shielded it from prosecution over the fatal 737 MAX jet crashes. Those crashes happened in 2018 and 2019 and killed 346 people. Now, I haven't followed the story closely enough to know exactly how fraud has gone into this, or how exactly they violated their agreements. And this is still like an ongoing developing story, but Boeing has definitely had some heat in the past year. They've had their CEO grilled at Congress, and they've had a lot of bad press. So it's definitely, Boeing has had a tough year, and we'll see if it continues. Hopefully some better corporate governance will allow it to fix some of its inherent underlying problems There's a very interesting, I believe, John Oliver piece that goes into some of the the origins of what made Boeing problematic. Back in the day, they were engineering first. You know, the CEO was an engineer, and a lot of the management were engineers. And then they had merged with another company, and that merger placed more so the finance and the management, like instead of engineers, they put more business people at the top, which led to cost cutting and trying to find more efficient ways to manufacture planes and such. And the most efficient way in terms of cost isn't always the best way in terms of safety or governance or any of these other important qualities a company should have, especially when dealing with something that it can be fatal when incorrectly done. It'll be interesting to see how these criminal charges and how the growing backlash from Americans, but also from Wall Street, from all the different stakeholders, how it'll force Boeing to change. I believe the CEO is already planning to or announced to step down, but of course, he has a golden parachute, so he's going to have millions of dollars from stepping down. And I think he's being replaced by another finance or business manager kind of CEO, which I know I've heard from various engineers and such at Boeing that they wish they could see an engineer take the helm and try to right the ship. So I wish them the best. I hope Boeing does well. Of course, it's part of the S&P 500. So most of you are Boeing shareholders, whether you know it or not. So hopefully we see improvement. All right. Well, that is the webinar for the month. Thank you so much for attending. Definitely a good month, some interesting stories. Next month, hopefully it'll be another green month, another up month, and I'll have more good news and more interesting stories to share. I haven't seen any audience Q&As come through that I didn't announce or didn't answer during the presentation, or that weren't personal, and I'll send you an email directly. So I'll wait a minute, but if not, I wish you all a good night and hope that you have a great next month. All right. Yeah, I don't see anything coming through. Have a nice night.